I want to talk about this article I've got from Kelly Evans, and she's a host on the CNBC. And she says, perhaps nobody better captured the angst of the financial crisis better than CNBC's own Jim Cramer, who in August 2007, more than a year before the crisis reached its apex, famously ranted, "My people have been in this same game for 25 years, and they're losing their jobs, and these firms are going to go out of business, and it's nuts. They're nuts. They know nothing. This is a different kind of market, and the Fed is asleep."
He's the first guy that called the downturn.
That's right.
That we heard, and that's how we were able to stop out of the market when we did in 2007.
That's right. And Kelly Evans has been reading Ben Bernanke's own admissions in his latest book, which includes reflections on how the Fed, under his leadership, missed the signs that the 06-07 housing and credit squeeze would become one of the worst financial crises in history. Bernanke says that in spring 2007, the Fed actually thought it had achieved success in navigating the tricky post-2001 jobless recovery period. With a modest rise in core inflation having ended the deflation concerns, it seemed possible that another soft landing had been achieved. He writes, "They were, of course, mistaken, or more to the point, they were still fighting the last battle instead of seeing the new storm brewing on the horizon. And are we at that same juncture again? It certainly feels like it. And once again, Jim Cramer has captured the moment. He needs to act," he says, quote, quote, "he needs to act and act now, and with a much stronger stance. He could even do 100 basis points, meaning a full point rate hike, and he should, after the superinflation-inspiring earnings disasters we just got from Target and Walmart, everyone should understand the urgency of the situation." And according to Cramer, and he is not alone, he's just louder, he says, the longer Powell dallies with small rate hikes, and the more likely we will have a crash landing, because these smaller hikes haven't slowed inflation one bit. If that risk is a larger recession, good. Powell needs to understand the threat of a recession now, and not the actual recession, but the threat of one is the right tool for the job here, and we can't do that by raising 50 basis points at a time. A rapid series of large rate hikes would allow him to cool down the economy to where many of the shortages out there would end.
But here's my question. So you've got oil prices that are not going to go down because production was stopped during COVID, and so now they're having to ramp it up, and they can only ramp it up so fast. So oil prices, gas prices, cannot recover at least for a year. They cannot go down because you cannot get production up, even though we're the number one producer in the whole world, and we can produce and process everything we get out of the ground in this country. We are totally energy independent. We still can't do it just because of the
government regulations.
Yes. Government regulations slowed it all down, and then they want to speed it all up, which doesn't work that way.
Yep.
So oil prices drive the price of everything because of shipping. So everything that goes to the store, every time the post office, FedEx delivers a package to you, they're paying more money for oil.
The products taken out of the ground to make the raw material, get the raw materials to make the products.
So I just don't, the rate hike, there's other factors in here that we're going to get to in a little bit, but I'll leave you alone and let you go on with this article.
He thinks that the public is far more on board with this than most policymakers would typically presume. No, excuse me. No one's happy with the state of affairs where we are right now. Their raise doesn't even cover inflation. Their store shelves are sporadically and unpredictably empty at times, and they, excuse me, I'm sorry. And were they being warned about the power blackouts and possible gasoline shortages on top of everything? It's stressful and exhausting, on top of an already exhausting 2 years in the pandemic. Anyway, he kind of sums up where we believe the new Fed chair, Powell, what he should do. He needs to act, and he needs to act now.
Well, here's the other thing, is they need to quit all talking. There's too many Fed people coming out and saying, oh, we should do this. And the next one's like, oh, no, we should do this. And so we have uncertainty. We don't even know what to expect because they keep changing their minds and everybody's talking and trying to get airtime. They need to get a grip and have one calm voice coming out and saying, here's what we're going to do. Here's what it's going to cause. We're going to get through this, yada, yada. That would help a lot.
Yep.
All righty. The longer the Fed lets nominal demand run hotter than the economy can handle, the more of it will continue to be eaten by inflation. Did you just say that? I don't think so.
No.
Okay. All right. Enough of that. So we have another article. This is one of the research companies that we follow, and this guy has been calling the bottom for a while, but everything else that we were subscribed to was the opposite of him. And so
Well, he never gave a specific time.
He did not.
And he's always really on the ultra conservative side, even in a bull market.
Right.
So
he's always looking for the downside.
We're always having to try to digest the information in light of what we know and understand about the companies that are providing them.
Yep. So this one says, we couldn't have been more on target last year in our criticism of the Federal Reserve and fueling the speculative asset bubbles both on and off Wall Street. And indeed, today, the Fed is owning, or pretending not to own, the disastrous results. We have moved our model fund portfolio into the most defensive allocation since the start of the 2008 Great Financial Crisis. Inside this issue, we reveal the severe subsurface damage that is hitting the majority of investors' portfolios as the Wilshire 5000 index has lost over $9.5 trillion in value since the start of the year. That's crazy. That is more than the entire U.S. stock market was worth at the start of the last bull market in 2009.
Right.
But first, we update that all-important list of top warning flags, which is changing almost weekly and not for the better. In fact, as we feared in our last issue, another red flag just got added in front of the overvalued housing market, as the latest NAHB survey shows that traffic of prospective buyers experienced its second largest monthly decline on record. Today, the NFIB Small Business Optimism Index has fallen to a level that is typically associated with a recession. Stimulus checks from the government and unprecedented easing by the Federal Reserve ignited a speculative frenzy coming out of the COVID crash. However, by August 2021, the bubble in the most speculative areas of the market had already peaked. Sending out money to people that didn't need it was stupid, and you can't pay it back. So we are all paying it back. I mean, we are all paying for that stupidity. This has been a painful year for investors thus far. The S&P 500 is off to its worst start since 1939, is on the verge of entering bear market territory. Even well-established companies were not immune to last year's valuation bubble, and they are now experiencing the fallout that inevitably follows all bubbles. Here are the ones that are down huge. Zoom, PayPal, Uber, Robinhood. Those people are pounded.
Yeah, give them some numbers to go with that. Zoom down 85%, PayPal down 75%, Teladoc down 90%, Netflix down 74%. These are staggering numbers.
Robinhood, which all the young people were out there betting on gambling and all of that on stocks, those people are down 86%. So they're having a woke moment.
And these are those high multiple stocks that I was talking about earlier.
I don't know if have you read much about Netflix? They're down 74%. I read that the competition, I think we talked about it last week on the show, the competition against them is so massive that they can't even compete.
Well, they can compete. They're still number one in the digital streaming environment.
Really?
They are still number one. They're the big gorilla that everyone's trying to get to. But the difference in the competition that Netflix has now is because of the quality of the competition. You have the Amazons, you have the Apples, you have Google. They're all entering the streaming environment, and they have basically unlimited checkbooks.
And it's cheaper.
It's cheaper, and that's what they're having to do, is they're having to go back and redefine their business model. Because I'm going to talk about them for a second, and I think a lot of our listeners have heard this. Is they used to allow 5 people to be on one membership, but the problem was that was supposed to be inside of a single household.
Right.
So each of the kids and the mom and the dad, they could all have their own viewing area, and they all their favorites were saved.
I love how everybody's in their own room staring at something different.
Right.
Isn't that great family time?
But but in our case, we use Netflix. It belonged to my brother-in-law and sister in Boston, and their parents in Sweden also used it. So I mean,
and I think your mom.
It was a global environment, Yeah, my mom too. So they're having to go back and change their business model, and they're losing people because of it, and they're losing people additionally because their prices were no longer competitive. But that's what the free market's about. Either you adapt and get right with the market, or you're going to be gone. They're not going to be gone, but they're suffering now.
Yeah, good luck with that. Let me see. Much to the dismay of investors, bonds, which typically act as a portfolio safe haven, which we stopped out of 2 months ago.
We stopped out
3 months ago?
4 months ago.
What?
Yeah, we stopped out.
Time's flying.
Yeah, it is. Actually, we stopped out in late December.
Wow. That just doesn't seem right to me in my head. But our bonds were only paying 3%. And I told Randy, I said, if you see them drop 2%, get rid of them. And we stopped out of them all the week after the Fed came out with the interest rate increase because it drove them down into the dirt. I'm seeing people coming in to see me now with bonds that are down 12 to 14%, and I'm reading in articles that there's some that are down 19%. And you think that's a safe haven. So, anyways. We have a caller. Good morning. You're on with Randy and Sherri.
Good morning. Good morning. The very best to Randy and Sherri early this morning.
Good morning.
How you all doing today?
We're doing great.
How are you?
Great. I'm doing fantastic. I'm having a yard sale off of Hartley Bridge Road. So come and get it.
Do you have a big sign?
Have you set up a voter drop box?
What is it?
Have you set up a voter drop box there so people can drop off their ballots?
No voter drop box. No, but I've got everything else other than the voter drop box. But anyway, I was going to ask you all if you all could maybe go over some of the the IRAs. You know, what you can contribute to those and the 401ks, because all of them are a little bit different, you know, and now they've changed. You know, for what you can, you know, put into there. Now, I don't have to worry about that anymore because I'm not going to go back to work.
Right.
I'm retired, and I'm glad about that. But I remember when I was, you know, saving money, I always wanted to try to put the most in there that I could, and it always seemed to go up like $500 the next year. I said, oh, good. You know, I could put that extra money in there.
I got it.
So that's always good to kind of know, you know, what that is. And I'm glad that y'all brought up Elon Musk.
Yeah, what do you think?
I really think he is trying to do some really good things, and of course now they're all after him because he said he's going to vote Republican or something like that. Yep. Oh my God, the world's coming down on him now because of that. But he is really trying to do some good stuff, and like you said, Sherri, we need more people that are up in the government, in the Congress and the Senate, that actually have been in the military or had a business, you know how stuff works. Things, you know, that hold people accountable, you know, for their actions. Otherwise, you know, if you're in the service, you could die, or if you're a business person, you could lose all your business, or all your money. You want to have people accountable up there. So I'm so glad you brought that up.
Well, take a look at our previous president, who did have a business background, and all of the angst they put him through.
Right.
That's why a lot of people don't want to do it.
Yeah, all the things that he got done, I thought that was really good, you know, holding people, do what you say you're going to do. And he did it, even though people didn't like what he did. I sure wish he was in there now. I wouldn't be paying $3.45 for eggs now. Oh, my God.
Right.
It's just crazy, everything.
Right.
But anyway, tell me about how much money, and y'all have a great show, and we really appreciate it. And I'm hoping I can get some people from Smileys to come on down here.
Yeah, you're not that far from them.
Here. Follow the signs on Hartley Bridge Road. I got better prices than Walmart.
Oh, that's funny.
And I will say, I've been to your house, and you got a lot of stuff.
And it's good stuff.
So there's some stuff for sale at Bobby's house.
Absolutely.
Good for you clearing out. But he's done such a good job.
Yep.
I go to his house. His mom is in failing health and can't get out too much, but you're doing a really, really good job taking care of her, Bobby. I'm really, really proud of you.
Yeah, she's going to be 95 on June the 12th.
Wow.
I'm hoping that I have her, you know, for that time, and we'll just see, but she can't really do anything now. She can't even talk, so it's just been a real tough time, so she's not going to use this stuff that she has. She always said, just hang on to it, just save it. You get rid of you leave my stuff alone. You get rid of your junk. That's what she would tell me. But anyway, so I have a lot of treasures out here for a lot of different people. So better prices than Walmart, guaranteed. So we'll talk later, and y'all tell me about that. I'm anxious to hear about all the different 401ks and the different ones that we can contribute to, because it's not just them. I think there's some things out at the base, too, you know, that you can contribute to. I guess that's a 401k, but I'm not sure. They call it something else, I think.
Their saving plan. Yeah.
Yeah. So
good deal.
Just let me know. I'll be listening.
All right.
Take care.
Hugs
Have
to
a
you.
great day.
Bye-bye.
Bye-bye.
So the maximum deferral to a retirement plan for 2022 is $20,500. Catch-up contribution limits for 401ks and such are $6,500. Let me see here, $457 annual. Because there's another one if you're over a certain age. Annual. So if you're, I used to have a SEP IRA because I owned my own business. Now that I have taken over Rosenberg, I have a simple plan. So simple plans max are $14,000 with a catch-up of $3,000. They're all different. If anybody wants this information, just shoot me an email, Sherri, Sherri, at rfmoney.com, and I can shoot you this article. Let me see. But I'll tell you the best deal, if you're a business owner, is a SEP IRA to me, because you can contribute up to 25% of what you make right into the SEP. And I started doing that back when I started in the insurance business. Man, that's been like 30 years ago. That was advice from a CPA at the time, and I'd started maxing it out every year. And then when Randy came under my umbrella, working with me at Rosenberg, and the two of us were under contract by Steve. I was still in my own independent business. We were still all those years, the last 15 years. How long you been at Rosenberg?
Since 2014.
So I've been able to max out and put basically 25% of what we earn into a SEP, and that's before expenses. So it's right money that you make right into the SEP, and you're investing it, and it's a huge. If you don't understand how to do these things as a business owner, you're really missing the boat, and it has to do with the structure of your company. So I'm an S corporation, and I have been for 30 years. I got into the insurance business years ago, and I went to a CPA, and he advised me my third year in to create a S corp. So all of that stuff you need to understand, and if you want to talk to me about it, give us a call. The office 478-922-8100. You can talk to me or you can talk to Becca. Either of us can sit down and talk to you about how to structure your business in a way that allows you to max out your benefits for yourself, because it's a big deal. And I have a person right now who I'm trying to get him to open a SEP, and he won't return my calls because it takes money out of your pocket, but it's taking money pre-tax out of your pocket. So it's a really good deal, and you're buying directly into your investment product.
And you need to start thinking long term. If you're thinking that you can't afford it, that maybe you can't afford to put that 25% in, like Sherri was talking about, but you can probably afford to put something in every month and just get the process started. And then it becomes a habit, and then you can start seeing that make a difference in that account balance, and it's motivating. Before we go on, Sherri, why don't you tell them who we are?
That'd be a good idea. So you've been listening to Your Money, Randy and Sherri Goss with Rosenberg Financial Group, and you can call in today. The number is 478-742-0940. We have offices in Macon and Warner Robins, and the main thing we do as financial advisors is provide retirement planning advice and manage our clients' investment accounts. If you can't listen live, you can always visit our website, retirerelax.com, and listen to the recordings and check out our special reports. There's some really good ones. We offer complimentary consultations to help you plan for a successful retirement, and we also provide educational seminars on estate and retirement planning in the community. And my favorite is my life book. I love doing that presentation. It only takes about 30 minutes. It's absolutely free. Just give me a call, 478-922-8100, and book me. I finally have a couple of presentations coming up. It's been so dry during COVID. I've been dying because I love getting out and speaking and educating people and for free. It's just fun. It's a blast. I have a good time.
Yes, you do.